Now to today's Executive Edge and ongoing regional bank worries. Some deposits at New York Community Bank Corp may be a flight risk after Moody's downgraded the lender's ratings again. NYCB shares plunged more than 20% yesterday. Not a lot of 20% left. I guess there is, Hugh, son. There's still 20% left, but because if you keep going down 20%, you never get to zero. Really, it's weird the way that works.
Yeah, Joe. Yeah, look, I mean, this is kind of an underappreciated impact of those Moody's and Fitch rating downgrades that happened late Friday. So one of the things that flew under the radar is that Moody's actually cut NYCB's long-term credit rating on their deposits to 3 levels below investment grade. And what we found is that there are actually a bunch of institutional business clients out there who really care about that rating. And we're talking about the mortgage escrow business and something called banking as a service, in which they deal with certain crypto clients. One is known as Circle, in which they effectively serve as the back office to some of these deposits. And so when you are suddenly below investment grade, what does that do? And, talking to industry sources, they say that it could trigger requirements for more collateral. It could trigger a requirement for them to move deposits to another bank. And certainly when you think about the cost of money these days, any of those offerings would essentially cost them more money to hold on to their deposits. And from what we can find, that there are roughly, call it $15 billion worth of these deposits that could be at flight risk. And that's roughly 20% of their overall deposit base, certainly adding pressure to the situation that NYCB finds itself in.
At least we only say those 4 letters, though, Hugh, at this point. When SVB, and I mean, that spread a little bit, but there's been zero contagion from this, not to minimize, it's a New York community bank, et cetera. And we definitely will see, continuing problems. I mean, would you leave much money? Why would you leave it there when there's so many other banks around? So they're definitely going to need to pay more.
Well, there are concerns about that. I mean, to be clear, the last update that NYCB gave was February 5th, right before the series of Moody's downgrades. At the time, they said that 72% of their deposits were either insured or collateralized. That's really the inverse of the folks like SVB and First Republic, in which most of their deposits were a flight risk because they were uninsured. On the other hand, if you look at NYCB, nobody else has the concentration that Barry was talking about in rent-regulated New York City businesses that are all of a sudden are worth a lot less after 2019 law changed the economics on those businesses, and nobody else grew as much as NYCB did. They added Signature last year in the banking crisis. They added Flagstar, and they essentially doubled in size, bringing them over $100 billion in assets. And with that, brought a lot of scrutiny that they weren't really ready for, Joe.